We're proud of the fact that we are balancing high growth and profitability. We continue to feel like we're very in line with allocating our capital towards our strategy, which we outlined with investors in February. And at this point, for us, it's about the consistency of performance, and that's what I think shows through in the results.
And which regions are the most promising? Because as I'm given to understand, you are a cloud-based accounting software firm for small businesses. And you, of course, have offices in New Zealand, Australia, the United Kingdom, United States, South Africa, Singapore, some very big markets. But I want to zero in on how much does the West really contribute to your revenue stream, and how much are you hoping to see traction there in the wake of rates coming down and there being higher spend, higher budgets for CapEx?
Well, first of all, as you pointed out, we have 4 million subscribers across 180 countries, both those we serve directly with the sales channel and a digital offering, and those we serve only with digital. I think if you look at the split in our business, it's roughly 55% Australia, New Zealand, and about 45% internationally. And we see strong growth in what we call our top 3 markets, which are the UK, the US, and Australia, as being the most important strategic markets for the business. So we drive a portfolio allocation across all those markets, but really what we're looking for is strong subscriber growth and ARPU growth, in particular in our 3 key markets. And we hope that comes through in our results. That's what you see.
But with rates going down, the question is, did you particularly see a pickup in subscriber additions?
Well,
is there a run rate in mind?
Yeah, look, I actually think our subscriber additions are maybe less a function of rates and more a function of cloud penetration in a given market. As we think about it, the US and the UK, as an example, have lower cloud penetration than Australia and New Zealand. And then we look at underlying trends, not only with regard to rates, but more importantly, regulatory trends. The UK, as an example, has making tax digital, which typically when you see regulatory trends into a market, they advance cloud penetration. So I'd say we're kind of less maybe susceptible to rates. It's a pretty macro resilient business. It's needed in good times and bad. But things like regulatory tailwinds really drive the adoption of our product.
Yeah, you make a very fair point. You mentioned strategic markets. I'm keen, bigger picture, Sukhinder, to give our viewers an idea of some of your strategic expansion plans on the horizon.
Sure. So first and foremost, we feel like already there is immense TAM, not just in our core markets, but also in the 2 customer segments we serve. We serve both small businesses and accountants and bookkeepers. And within that, we serve multiple segments of small businesses and accountants and bookkeepers. So really, we think about the TAM expansion first and foremost within the current segments and markets that we support. And then we think about the next TAM expansion being with the number of products we support. So today, we're a core accounting platform. Increasingly, we are an embedded payments platform. Increasingly, we are a payroll platform. So we already believe that the number of geos, the number of segments, and the number of products we offer give us tremendous TAM opportunity within the places we play already.